What if I told you that the money in your wallet, the numbers in your bank account, and the entire global financial system is basically made up, not a scam, not a conspiracy, just made up. A collective story that 8 billion people agree to believe in every single day. Think about it, that dollar bill in your pocket. It's cotton and linen, worth maybe 12 cents to produce. But we all agree it's worth $1. The digits in your bank account, they're literally just numbers on a server somewhere. If that server crashed and there was no backup, your money would simply cease to exist, and here's the wildest part, it's always been this way. Money has never been real in the way most people think. And today, we're going to break down the entire history of this collective fiction, why it works, and what it means for your life. Let's get into it. So what do I actually mean when I say money is fake? I'm not saying money doesn't matter. Obviously it does. I'm not saying the economy isn't real or that your bills won't come due. They absolutely will. What I'm saying is that money has no inherent value. It's not like water, which you need to survive. It's not like food, which nourishes your body. Money is valuable only because we all collectively agree that it is. It's a shared fiction, a story we tell ourselves and each other, and this isn't some radical new idea. Historians, economists, and philosophers have understood this for centuries. Money is a technology, a tool, a social agreement, nothing more. But here's what's fascinating. Understanding this doesn't make money less powerful. If anything, it makes it more interesting. Because if money is just a story, then the story can change. And throughout history, it has changed dramatically. Let's start at the very beginning. For most of human history, there was no money at all. For hundreds of thousands of years, humans lived in small bands and tribes, and they shared resources communally. If you killed a deer, you shared it with your group. If someone gathered berries, everyone ate. There was no keeping score. No ledgers, no debts. Just mutual aid and survival. Then something interesting happened. As societies grew larger, people started trading. You've probably heard of the barter system. I'll give you 3 chickens for that bag of wheat. Simple, right? Except here's the thing, many historians now believe pure barter economies never really existed. It's actually kind of a myth. In reality, most early trade was based on credit and social obligation. You'd give someone wheat today, and they'd owe you a favor later. Communities ran on trust and reputation, not immediate exchange. But as societies grew even larger, and people started trading with strangers, a problem emerged. How do you trade with someone you don't know, someone you might never see again, someone whose reputation means nothing to you? You need something that both parties trust, something that represents value even between strangers. You need money. The earliest forms of money weren't coins or bills. They were commodities, things that people actually valued and could use. Shells, salt, cattle, grain. In various places and times, people used tea bricks, beads, or even giant stone discs. These worked because they had some actual utility. You could eat grain. You could use cattle for farming. But they also had problems. Cattle die, grain rots, shells can be found on any beach. Then, around 600 BC, something revolutionary happened in the kingdom of Lydia, modern-day Turkey. They created the first standardized coins made from electrum, a natural alloy of gold and silver. This was huge. Coins were durable, portable, divisible, and here's the key part, standardized. Everyone agreed on what they were worth because they carried the stamp of the kingdom. The king said this coin equals this amount of value, and people believed it. But wait, that's a bit strange, isn't it? The value came from belief, from trust in the authorities stamping the coin. Sure, gold and silver have some inherent properties people valued. They're shiny, rare, don't corrode. But their value as money far exceeded their practical utility. You can't eat gold, you can't build shelter with it. Its value was primarily symbolic, agreed upon. In other words, even commodity money was partly fictional. The story was just easier to believe because you could hold something shiny in your hand. For centuries, coins dominated. Gold, silver, bronze, depending on the value and the place, but coins had problems too. They were heavy, hard to transport, easy to steal. So around the 7th century in China, during the Tang dynasty, merchants started using paper notes. These were essentially receipts. You'd deposit your coins with a merchant, and they'd give you a piece of paper saying, "This person has X coins stored with us." Think about what just happened there. Money went from being the physical thing to being a representation of the thing, a piece of paper that means something only because someone promises to honor it. This was the first major step toward abstract money, and it worked. Paper money was lighter, easier to hide, easier to transport. Eventually, governments took over the printing of paper money, and it became the norm. But there was still a connection to real money, to gold and silver. Paper bills were supposedly redeemable for a fixed amount of precious metal. This was called the gold standard, and for a long time, people thought it kept money honest and real. In the United States until 1933, you could walk into a bank with your paper dollars and exchange them for gold. The paper was just a convenient stand-in for the real thing, but then the 20th century happened and everything changed. The two world wars put enormous strain on global economies. Countries needed to spend more money than they had gold to back, so they started fudging, printing more money than their gold reserves technically allowed. In 1944, world leaders gathered at Bretton Woods and created a new system. The US dollar would be pegged to gold and other currencies would be pegged to the dollar. America had most of the world's gold anyway, so this kind of made sense. But here's the problem: America kept spending. The Vietnam War, the space race, domestic programs. More and more dollars went out into the world, but the gold supply stayed roughly the same. Other countries started getting nervous. France, in particular, kept sending dollars back and demanding gold. The U.S. was running out, so on August 15, 1971, President Richard Nixon made an announcement that changed everything. He temporarily suspended the convertibility of dollars to gold. That temporary suspension, it became permanent. Just like that, the last link between money and anything physical was severed. The dollar, and by extension, most world currencies, became what economists call fiat money. Fiat is Latin for let it be done. Fiat money is valuable because the government says so, and because we all believe it. That's it. There's no gold in a vault somewhere backing your dollars. There's nothing but trust. So here we are today. Every major currency in the world is fiat money, no gold backing, no silver, no nothing except government decree and collective belief. And it gets even more interesting when you look at how money is actually created now. Most people think the government prints money. That's partially true. Physical cash is printed by government mints. But here's a mind-bending fact. The vast majority of money in existence was never printed at all. It was typed into existence by commercial banks. When a bank gives you a loan for a house, a car, a business, it doesn't go into some vault and grab cash to give you. It just adds numbers to your account. Money created from nothing. Well, not nothing, created from your promise to pay it back. Something like 90-97% of all money in developed economies exists only as digital entries in bank computers. It's never been physical, never been touched. Just numbers representing value that we all agree is real. Here's where it gets philosophical. If a bank can create money by typing numbers into a computer, what even is money? Is it a thing, a relationship, a promise, a shared delusion? The answer is, it's a social technology. A way of coordinating human activity at massive scale, and honestly, it works pretty well most of the time. And then came Bitcoin. In 2009, a mysterious figure or group called Satoshi Nakamoto released something radical. A form of money that wasn't controlled by any government, any bank, any central authority. Just math and computer networks. Cryptocurrency is the logical endpoint of everything we've been talking about. If money is just a shared story, why does a government have to write it? Why can't the story be written in computer code? Verified by mathematical algorithms, trusted through decentralized consensus rather than institutional authority. Now, whether crypto will replace traditional money, supplement it, or fade away is beyond my ability to predict. There are passionate believers on all sides of that debate, but here's what's undeniable. Cryptocurrency proves the point we've been making. Money can be literally anything we collectively decide it is. Lines of code, numbers on a blockchain. It doesn't matter if people believe in it and act like it has value. It has value. Money is, and always has been, a collective act of imagination. The most successful shared fiction in human history. So what do we do with this information? If money is fake, should we even care about it? Of course you should. Here's why. Money being a social construct doesn't make it unimportant. Language is also a social construct. Sounds and symbols that we've all agreed mean something. But you wouldn't say language doesn't matter. It's the foundation of human civilization. Money is the same way. It's a tool that allows strangers to cooperate, economies to function, and value to flow across the world. Understanding that it's a shared story doesn't diminish its power. If anything, it helps you see more clearly how the system actually works. It also reminds you that the rules of money are not natural laws. They're human choices. They've changed before, and they'll change again. The way we create money, who controls it, who benefits from it, these are all decisions made by people. Open to debate, money isn't physics, it's politics, it's culture, it's collective agreement, so yes, take money seriously. But don't mistake it for something it isn't. Don't give it more power over your mind than it deserves. Understand it for what it is, the most elaborate game of make-believe ever invented. And once you see that, everything looks a little different. If you found this video valuable, hit that subscribe button and let me know in the comments, has this changed how you think about money? I'll see you in the next one. If this video changed the way you see money, subscribe to Reality Behind Finance. We break down the financial system, explain how money really works, and reveal the truth most people never see. Remember, money is fake, but understanding the system gives you the real power.